All right, ladies and gentlemen, Pfizer just reported earnings, and as most of you know, I've been pushing this stock for about a year now when it hit 25 bucks a share. We've done many analysis on Pfizer. It's been brutal, but at some point in time, I thought this stock was a solid buy, a solid dividend to add in the portfolio. From everything I can see right now, we're going to go over the earnings together, but from everything I can see, Pfizer to me looks like they did a pretty good job on top and bottom line beats. We had a price target of $27 a share, so anything under 27 I thought was a pretty good buy, and it's at the top of our watch list here. It's one of the top stocks that we thought was pretty safe as far as a downside risk. Nice dividend yield. If you bought at those levels, you had almost a 6% dividend yield. And I thought there was actually tremendous growth ahead for the company with all the acquisitions that they've been making. Now, obviously, it was a little bit of a higher risk because management has not been executing over the last about 14, 15 months, call it the last almost 6 quarters. Now, once again, you guys can see my analysis broken down here. And for 2024, I was expecting them to do right around $61 billion of top line revenue. That's just me running my analysis. And you can see here, guys, 2024 expected range is between 61 and 64 billion. So they're actually starting to widen up. They're actually starting to push to the upside as far as revenue goes and raises adjusted diluted EPS to a range of $2.75 to $2.95. So if we just do some quick paper math here on Pfizer is usually a company that trades between 13 to about 13 and a half times earnings. So even if we just meet in the middle here on these numbers and say that they do, let's just call it $2.80 of earnings. We take that 280. We put a 13.5 multiple on it. We're looking at a $37, almost a $38 stock with a 6% dividend yield, and the stock's trading for under $30. So to me, there's still about 22% upside. Reinvest that dividend. You're looking at pretty darn close to a 30%. So third quarter revenues came in at 17.7 billion, representing a 32% year over year operational growth. So if we exclude the Paxlovid, they grew 14%, and this is kind of where I want you guys to stay focused. Still strong growth here at 14%. They're on track to save about $5.5 billion. Overall, this is exactly what I expected Pfizer to do. Last few quarters were kitchen sinked. We kind of understood that as investors, that this could be the possible worst of it. But now they're kind of reaccelerating on growth. They're rebuilding out their pipeline, cost savings plans, a lot of things you have to like here. Nice dividend. Kind of just to kind of put some things in perspective here. Pfizer was trading around $25, $26, and they were doing $13 billion in revenue. In 2024, they're now doing 17.7 billion in revenue. We take a look at net income coming in at 4.4 billion versus negative 2 billion. Diluted EPS came in at 78 cents versus 42 cents. And adjusted EPS came in at $1.06 versus last year, same quarter at negative 17 cents. And the stock is still trading for under $30 a share. So at this point in time, I think we can see that their business model is starting to stabilize here. Now, we're obviously not going to be expecting 13, 14% growth rates going forward. I think, the growth rates that we're currently using in our models is 1% growth rates and then 6% growth rates. So you guys can see here that I'm averaging out that by 2026, I believe they could do $65 billion worth of revenue. And I do think a lot of the acquisitions that they've been making are going to start paying off, and we're going to see consistent 5 to 6% revenue growth going forward. So yes, they had that nice initial pop, but they're also that pop is coming from a pretty substantial low. Now the stock is only up 2% on the day. I'm kind of shocked it's actually not responding a little bit better, but that's completely fine because their cost savings are there. Their free cash flow is going to be coming. They're showing positive signals here, and it did have a substantial move here from yesterday of nearly 1.5%. So over the last 2 days, you're looking at a 3 to 4% move. I thought that this would be trading over $30 a share with this type of earning report. But what we'll see is, I guess, as the day progresses here, this is very early morning. It's still pre-market, so there's time for obviously things to go in either or direction. But I would say overall, this is kind of what I was personally expecting. As you guys saw from my models, they were pretty much spot on. From every aspect of revenue to revenue growth going forward, and everything I think is in line. I think if you didn't accumulate underneath $27, once again, this is probably something I wouldn't chase. But if it dipped back into the $28 range, I could understand averaging in. As most of you guys seen, I think this is closer to a $35, $36 stock with nearly a 6% dividend yield. So A lot of things I really like about this. This is not going to be a high flyer stock. It's not a get rich quick stock here, but it's a steadily growing company that has some tremendous opportunities to really have exponential growth 5+ years out. So as always, guys, really appreciate your time. Thanks so much for spending it with me, and we will see you all in the next one.